Aaron Taylor, the real estate guy.
Welcome to Real Estate Live with the Real Estate Guys, Aaron and Jacob Taylor.
We're keeping it real, we're keeping it current, and we're keeping it fun.
Las Vegas' #1 real estate show.
Talk to Aaron Taylor.
Call 310-MOVE.
Talk to Aaron Taylor.
310-MOVE. The real estate guy.
What's up, Las Vegas?
What is that, Sheila?
The Andy Griffith Show.
Had a girl, you know, Keone. You know what it is, right?
What's going on, Vegas?
Wow,
How
love
you
that.
doing this morning? I hope
love
you
that.
guys are feeling great, having a great time.
What other real estate show starts off with an Andy Griffith Show theme song?
I don't know.
None.
I don't know.
We're the only one in the
I don't know how
world.
many real estate shows there are out there.
Yeah.
Probably not too many.
There's only us.
Not very cost effective.
Who remembers
us.
Aunt B?
Aunt B.
Anyways, good morning, good morning, good morning. It's a blessed day. Happy to be here with both of you. Today we've got, of course, our host Aaron Taylor and our co-host Jacob Taylor here. And then we've got a guest today.
Your auntie.
Lovely Sheila Merrill, the lending lady, one of our fantastic sponsors.
Let me warn everybody listening right now, if you want to change your channel and go watch TV or something else, because it's mortgages. It's boring.
We're gonna talk about loans.
It's so
and
boring.
rates
Like,
today.
Good stuff.
I
Good
didn't even
stuff.
want to be here today. Like, really? We're going to talk about finances and interest rates and, but I guess I have to bear through it. What do you
Yeah.
think? And
Why
then it's
not?
my sister.
Yeah.
Really?
Even more boring.
So lucky.
Jeez. Anyways, let's thank our sponsors. Hey, no other than our Cheers, Grape Street Cafe.
Sometimes you want to go
Where everybody knows your name. And they're always glad you came. Grape Street Cafe in downtown Summerlin. John McGibbon, we always give away Grape Street Cafe gift cards. Well, we don't. John McGibbon does. Very generous man.
Very generous.
We need to get him that house on the 2 acres with the
Dude.
horse property.
get him
that I've been
pumped
trying.
up.
I can't even get him and Shelly to go look at it. Like, I don't know what to do except for just to kidnap him.
You just go steal them from the restaurant one day.
Come on, John. Go look at it. It's just a look-see. That's all it is. I'm afraid if he looks at it with Shelly, they're going to buy it. That's the problem. Anyways, Grape Street Cafe, downtown Summerlin. And our other sponsor, Neo Home Loans, with Sheila Merrill right here to my right.
Hello, everybody.
Our premier lender in the office that we always use, and Fidelity National Title.
Fidelity.
More than just a title company, they're an experience. Did you know that?
They are.
Did you know that's their slogan?
I didn't-
We're more than just a title company. We're an experience.
I believe it, though.
It should be if it's not, because I just made it up. It sounds pretty good, right?
Sounds wonderful.
And that sounds good. Who else we got? Is that now we're down? We got rid of the attorneys.
We're down. We're
The
down.
attorneys didn't want to stop. They didn't want to pay anymore.
Apparently, attorneys are having a tough time out there.
I
They don't
why.
see the value in the real estate guys anymore.
Well, we're gonna wake them up
I
down the
think
line.
we
I'm not
are.
gonna say anything,
I don't know.
but we're gonna wake them up.
I think they're going to be a little curious.
I think they will be. As normal, we're going to go over all the housing numbers, what our predictions are for the month, for the week, for the year. We talk about that all the time. We have a few houses of the week that are pre-listed or they're just now going on the market. We do a lot of business from both of our radio shows and our podcast. So we'll talk about our houses of the week. We have our lender, Sheila Merrill. We're going to play Stump the Chump, Stump the Lender. She doesn't know this, but we always ask our guest 5 questions, and we see if she gets them right or not. We have a great prize to give to her if she gets them right.
I get a prize? Wow.
Yeah, you get a prize. What do you think, JT?
I'm so
Sure.
excited.
What else we got,
Nice
JT? We're
pat on
going
the
to talk
back.
about interest rates.
We are going to talk about interest rates. We got some good questions that I think you guys as the consumers out there would be interested to know about. How do rates work, right? Where are they at right now? What is the par rate? What is the rate when they say, hey, if the rate's 6.75, what does that mean?
Yep.
How much does that cost you? All the good stuff. Let's get into the fine details today because
And
I think people want to know.
our homes in Pahrump. We're building homes in Pahrump.
We
Yeah.
are. Our TikTok on Pahrump actually went kind of crazy. Everybody was talking about Pahrump when we did a clip from that. It was a good one.
Yeah, I heard about that. So we have 6 houses we're building, little entry houses, about 1,200 square feet or so, for like 320, 330.
All
Good sized yard, all brand new.
All 45,000 Perumpians saw that TikTok.
They did.
They
Then
all
we're going to
had a
have a
comment.
model home there, and we're going to build 1350, 1600, and 1850 single-story homes in Pahrump on acre and a quarters with relinquished water from anywhere. The smallest ones are going to be in the high threes. The larger ones are going to be in the high fours, which is remarkable for an acre and a quarter, a brand new home, single-story,
Brand
2 or
new.
3 car garage, right?
Exactly.
Sheila's one of our investors. I'm one of the investors. James Martin, Gina. We got some great people. Just all of us friends that are just having fun building houses in Pahrump.
Why not?
It can't be a bad thing if you're friends of yours. You're just having fun, right?
I mean, as long as there's money to be made.
If you make a few bucks, you have to get greedy. You ain't gonna make a lot of money, but you can make a little money. If you're thinking about buying or selling a house, or property management, or commercial, or land,
Or lending.
or lending, call the real estate guy, 702-310-6683. That's 702-310-MOVE to get a hold of the real estate guy.
Boom.
So before we take a break, I think we should get right into the questions. Let's have a little fun.
All right, sure.
We're going to give her one, and then we're going to go to a break.
All right.
Let's do it.
Okay, question number 1. Keone, you ready? I know you're excited. Are you excited? There you go, bobblehead. Okay, question number 1. Sheila, what's the difference between a pre-qualification and a pre-approval? And which one do I frame and hang on the wall? Start with
Wow,
pre-qualification.
that's a difficult
What's that
question.
called? We're making them easy on you.
Pre-qualification or pre-approval? Pre-qualification is exactly what it sounds like. It's just a pre-qual, meaning credit was pulled, verbal information was passed regarding your employment, your income, your credit report was pulled, your score was looked at, your debt-to-income ratio. That's it. Nothing else was proven. It's a pre-qual. Basically, you could qualify up to this based off providing additional information for your pre-approval. A pre-approval, can I jump to the next one?
Go, pre-approval.
All right.
Fire away. You're on a roll.
You want a pre-approval, people. You want a pre-approval because that means what I just said was completed. But in addition to that, you provided documentation for employment, for income, your assets, what you're going to use to purchase the home, and you're solid. So when your realtor presents that offer to the listing agent, they know you're good to go, that you've already been pre-underwritten. A pre-approval is pre-underwritten, at least with us. With us, you're pre-underwritten and you are solid. You can go shop with confidence.
So which one do we frame and put on the wall?
The pre-approval.
Pre-approval. Yes, Ramon.
Ding, ding, ding.
She
ding,
got
ding,
it
ding,
right.
Ding, ding, ding.
Keone. This is exciting stuff. This is the only way you can make financing, loans, interest rates exciting.
Exactly.
Other than that, turn it off.
Yeah.
All right. We're going to take a break. Rosemary, just want to reach out and say hi to you. My friends listening. Rosemary, what's up, Rosemary?
Hey, Rosemary.
How are you? All right. We're going to take a break. We'll be back in just a minute.
So the camera just keeps rolling and then you...
We're still going.
Oh,
This is it.
cool.
We're rolling.
Okay.
So, Sheila, do me a favor.
Yes, sir.
Tell me right now, tell the people that are watching, do you think those rates are coming down? No bullshit. I mean, come on. I'm going to tell you right now, I'm going to call bullshit because we do the same thing. We really don't know. We say, we think the market's going up or all the market's going down. Or I think we don't know.
We do know based off of data. We can take a look at the past data and make a prediction based on what's happening the last few months. Absolutely.
But it doesn't. But nothing's happened.
It all depends
Not
on
yet.
reports.
There's another Fed meeting in what?
How the market perceives
There's another
it.
Fed meeting in 2 weeks, right? It's
Yeah.
what day is it in June? Do you know?
It's like the 8th or the 9th.
Right.
Or something. It's usually
If
the
they
first
don't
2
lower it
weeks.
in June, they're lowering it in July by a quarter point.
Well, remember, the Fed fund rate has nothing to do with long-term rates. What it does is it spurs the market. It gets them excited. And then the bond market will follow.
Then why do we even watch it? If it has
Why
nothing to
do
do
we
with it.
watch it?
Because
Exactly.
because it's not directly related, it's
Right.
indirectly related. Meaning, you know, like if I throw a baseball at you in the eye, I may not directly cause the hospital visits to go up, but indirectly you may go to the hospital in the next few days, and the hospital visits will go up. If I throw enough baseballs
That's
at
the
people
best
in the
analogy
eye,
you can come up with.
just some random shit. Yeah, I'm not saying everybody's gonna go and everybody's gonna go to the hospital.
So what does the
I
Fed
don't know.
rate even mean? Like, what is it
The rate
control?
at
It
which
has to
banks
do
loan money
with
to each other.
banks lend money to each other. That's what it is. It's an internal rate that the banks lend money back and forth to each other.
But they don't have to go by that rate.
Well, that's what they go by.
That is what they go by now. So when
Yeah.
they're lending money
That's bank
cheaper,
money. Bank
when
to
they're
bank.
lending money cheaper, they spend more.
Not
Spend more
long-term
money
loans.
here.
Long-term loans are directly tied to the mortgage bonds. 10-year
But when
treasury.
when the banks are spending more money here, they can offer. I think it trickles. It's like a trickle down effect to mortgage rates eventually, to where rates can come down. Like it's like a domino effect because the Fed rate gets lowered. Eventually, things trickle down, and then the mortgage rates eventually come down.
Yeah.
Like if they drop the Fed rate by a point, let's say a full point, absolutely the long-term rates are coming down very quickly.
That's going to be an incentive.
Right, very quickly. I don't know exactly how it trickles down, but that's why it's hard. I don't fully understand how they're indirectly related.
Here we go.
And I know if you lower this, but
Alrighty, we're back, everybody. Welcome back to Real Estate Live with Jacob Taylor, the real estate guy, and Aaron Taylor, the real estate guy. For all your real estate needs, commercial, residential, property management, land, call 702-310-6683. That's 702-310-MOVE. Let's get right into it. Question number 2. You ready?
Ready. Go for it.
Okay. We gave you an easy one. We're just breaking you in.
I have my brain juice.
All right. And look at the camera every now and then, Sheila, just for the podcast. Say, hey, what's up? All right. If interest rates go down after I lock mine in, can I cry until you get me a better rate?
Yes, you can. You can cry as long as you want, but I wouldn't recommend that. I would recommend picking the phone up. Picking the phone up and give me a call.
So if interest rates go down after I already lock it in, can it be changed or not changed?
No, a lock is a lock. A lock is good for whatever period of time that we agree to lock it in. Could be 30 day, 45 days, 60 days, 75 day, 90 days. The lock period is how long your lock is good for. The lock means that you promise to deliver this rate to whoever the investor is going to be.
Okay, so let me ask you a question,
There's no
hypothetical.
float down.
So I locked in this rate at 7%.
Mm-hmm.
A week before I close, you're locking in other rates at 6%.
That's not going to happen. But hypothetical is what
Okay,
you're saying?
6.5, let's say.
Okay.
Let's say 6.5.
that's still
You're
not
locking
happening. But
Well, it might.
no, not that much.
Not in this market, Aaron.
6.75 is possible, maybe from week to week.
Okay.
0.25.
6.75. You lock it in at 7, it goes to 6.75. You can't give me the 6.75? How about if I let it expire?
Then you have to wait 30 days.
How about if I just fire you and go to another mortgage lender?
And you can get it, but you're starting all over, and you're
Oh,
going to
that's-
need.
I'm not going to close on time then.
You're
Right,
not
not
going to
gonna
close on
on
time.
How about can I?
Well, you may or may not get it. Put it that way. Everybody's different.
Yeah, man.
Can you pay? Can you pay to
Yes,
lower
you
the
can
rate?
pay to lower it. You can. You can pay points to lower it.
Well, let's say no points, but let's say you have a lock at 7, like you said, and then the week after that you lock, it's lower, and let's say you're 6.825, 6.75, and how is it possible to get that rate? Is it possible? Could you pay to let the lock go?
No.
Okay,
no,
so how could you? Is it possible to get that next?
when we see rates change, it's typically not the rate itself. It's typically the points that go along with the rate.
Right.
We're not in that kind of market right now where we're actually seeing the rates go down. We're seeing like the points.
The
So
cost
say
of the
the
rate,
cost of the rate. Points are the cost of the rate. So we're seeing like if it's 7 example, then it might cost a point. It might cost a quarter of a point or
So
whatever it is.
That brings me into a really good question because I don't think anybody out there really, it's 99% of consumers don't understand this. What is the difference between the par rate and the rate you usually offer clients?
It usually makes sense, and this is kind of throughout lending. As far as I remember, I started in the early 2000s, 2003. So whenever you get a rate, it makes sense to pay up to 1% for that interest rate, because the theory is once you lock in, you're not going to refinance every 6 months, every year. You're going
Right.
to refinance
Doesn't make sense
when you're going to save
cost-wise.
at least a point
Right.
off of the interest rate itself. So that's why it makes sense to buy it down a little bit up front. Now, some people it doesn't. I have somebody I just locked in. We really didn't buy it down that much, but we still bought it down a little bit from, it would have been like
not a full point?
7.375. Yeah, not a full point. Some cases it does. We look at everybody individually and then, educate them, and then they make a decision.
Right.
You know what I don't like is when, so like your sister went and bought a house in Texas, right? I was very involved in Mimi. You know,
I
your
wasn't.
goddaughter, in her whole process over there. And the agent hooked us up with their lender. We wanted to kind of use a local lender right there in this little town of San Angelo. And so I met with the lender. I said, hey, what are your fees? I asked her in front of everybody. She goes, we have a fixed fee, underwriting, processing, $1,200. That's it. I say, you charge nothing else? She goes, no, we don't charge nothing else. Okay. So we get her house, we buy it. I asked for the settlement statement. Let me see what you're signing. She showed me everything. There's a origination fee of 0.064 for $2,100, something like that. And that's a fee. So I called her up. Before she would have talked to me, I sent her an email. She wouldn't talk to me. I said, you said your fees were only $1,200. They're not $1,200. I'm not talking about prorations. I'm not talking about that. I'm talking about your hard fees. And there's a $2,100, it's called loan origination fee. It's like a half a point, right? That's on there. Well, she took it off, but she got really pissed off. And then she told Mimi and Paul, I don't want to talk to your dad anymore. Don't have him call me. Because I caught her. And there's things out there that people don't realize how lenders make money. There's 3 ways. Tell me if I'm wrong, Sheila. Number 1 is on the interest rate, right? They're not going to give you the same interest rate they're getting your bank, your lender, your servicer, whoever it is. They're going to make a little money on that interest rate. They're not going to buy money at 4% and retail it out for 4%. They're not going to do that. They got to make some money on the interest rate.
Sure.
Number 1. Number 2 is fees. Fees directly can be negotiated with your lender. So ask them, what are my upfront fees? Don't worry about prorations, taxes, sewer, prepaid it, that stuff. You got to pay that, right? But your costs that are negotiable are your underwriting fee, processing fee, loan origination fee. What else, Sheila?
Well, if you have an application fee,
all those things are negotiable. Ask the lender, what are my fixed fees? That's so important to ask.
Right. The only people that consumers like to negotiate with is the realtor.
Yeah.
There's title. There's lending.
There's so much.
Home inspection, potentially.
And we love negotiating for our clients. We both beat up a lender all day long, especially before you lock in a rate.
Right.
We can beat them up, beat everybody up. And then the third way a lender makes money, do you know?
I thought you said all 3.
Nope, that was 2. They package those loans up and they sell them to
on
the secondary market.
Yeah,
And that's where they make their money. That's probably where they make most of their money, right?
probably.
Well, that's usually the broker, right? Not the lender.
That's the house.
Yeah. So
So,
back to
yeah.
the question, Sheila.
Let me
The
keep
answer
going.
was-
Let me keep going. I didn't finish my
Oh,
my
go
statement
ahead.
here.
Did I
because-
interrupt you?
Just a little bit. But it's
Okay,
okay.
go ahead.
So when you're talking about, I just want the consumers to understand this because I think most people. That's why I always see arguments online about rates and people are talking about 2 different rates, but I think there's just a misunderstanding with what this means. When a lender's talking about this is the rate, right? This is the rate out there right now. They're usually discussing that with a point or with 1 discount point, right?
Right. Yeah,
It's-
that's true.
So explain that, elaborate on that a little
Yeah,
more.
regardless if they say it or not, it's usually with the point. And then when you get into the nitty gritty, when you get into the costs, when you get your loan estimate, the loan estimate is something once you're in contract and the application has been submitted with the property address within 3 days, you have to provide the borrower a loan estimate. And that is kind of like a good faith estimate showing what the lender fees are, what the title company fees are, an estimate. It's going to be a higher estimate on those until you actually pick the title company. And you also have an option. Some properties, some clients are eligible for an attorney waiver, attorney title waiver. So you can do that instead of paying another fee of title company, get a reduced cost on it. It's not very popular here. Back east, it's more popular.
Got it.
But yeah.
Yeah, so I just wanted to elaborate on that because you'll see people talking online like, hey, the rate's 7.25 today. And someone's like, no, the rate's 7% today. And they may just not be under the same understanding that maybe the par rate is 7.25. Maybe the rate that lenders advertise right now is 7% because they're advertising a rate with a 1 point with 1 point contributed to the buy down, right?
Yeah.
And that's what you call the discount point, correct?
That's the discount point to the
Right.
client.
So they're paying 1 point to get 7%, but the actual par rate with no extra cost is probably 7.25, 7.375,
exactly.
whatever it is.
And you
Right.
really have to be careful because I found I have clients that just close on their loans and then they get these solicitations in the mail and it says, regarding your loan with Neo Home Loans or whatever. It's like 6.25. And then I says, well, send that over to me. Let's look at it. But the fine print at the bottom says 2.75 points to get this rate.
Right.
So you got to beware.
That makes no sense to pay that much.
No,
Right? Yeah.
no.
Yeah, just start off with a real estate professional. Call the real estate guys. We're going to walk you all through this. We're not just going to help you and assist you on the purchase of your house and get you the best deal possible. But we're going to go over your finances and your mortgage with you as well because that clickbait that you see out there, you know, rates change every day, right,
They
Sheila?
do.
You can offer whatever you want as far as the interest rate. That fine print on the bottom is going to tell you 1 point, 2 points, 3 points. They can say, hey, 4% interest rate. And on the bottom, really, 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 really small, it costs you $30,000 to get it.
Yeah.
So call for details. That pretty much covers you for everything. You buy a house from the real estate guy today, we're going to sing it to Hawaii, and we're going to throw in a brand new Rolls Royce. Call for details.
I'd like
we're
to say
covered.
one more thing before we
Go to the next.
that
Before we
okay?
finish the same question,
finish it. Oh,
we went off on a tangent.
Well, that's
Oh.
important stuff. I want to get into some
It
real
is.
nitty gritty here.
No,
Well,
it's good.
the second question,
Well,
if
let
you
her-
guys
let her-
even remember,
let her finish. Let her finish.
is that part of the question?
Is it? Let's plug this, man. Let's plug this. Investor's Edge. Buy more homes with less money. Real estate investment class. Let me show you how to do it. So, Neo Home Loans, we're having a Investor's Edge Homebuyers Seminar this Thursday coming up at 8400 West Sahara, 6 p.m. to 7 p.m. Call for details.
Call for details. That's our office.
It's our
Home buyer
office.
seminar, right?
Homebuyer Seminar.
Yeah, come and learn something. Learn how to buy
It's gonna
investment
be good.
properties. Even if you're a first-time homeowner, still come.
It's fun.
Learn the process. Yeah, have a glass of wine, eat some pizza, stuff like that. So before we go to a break,
We have raffles.
I really want to finish the second question. So the answer, so we said if the rates go down after I lock mine in, can I cry to you until you get a better rate? The answer is, like you said, no. Once you lock, you're locked. Unless your lender offers a floating down option. Oh, didn't talk about that one. But you could offer a floating down option. Or, and yes, you can cry, but it won't change the paperwork.
Yeah, yeah. And in this market right now, I would not recommend if you get it good, if the rate is pretty good, just take it.
Because the floating down option costs some money, right?
No, well, yes. There's two ways. You float, you don't lock, and then you look at what the market's doing, and the feds are supposed to be going one way, but they change and they go the other way.
Right.
And then the bond market doesn't get better. Bond market gets better, goes up, interest rates stabilize or go down.
Right. To describe or explain the floating down option though, like after locking, right? Because there's the option to lock with the float down potentially, right?
Not everybody offers it, and very, very, very few offer that.
Got it. Okay.
So it's like it's got to. No, it's not offered right now. Let me put it that way. So,
Okay.
All right. I was going to have you explain something really quick before we took a break.
what was it?
Shoot, what was it? It had something to do with a
After you lock, if you can change it.
no. I don't know. We'll figure it out. We'll
Yeah.
take a break. We'll come back.
Yeah.
All right. See you in a minute.
You can. You can
What was
always
it? No, it
change
had
it
to
by
do
paying
with-
a little bit more discount points, but
Well, is it ever worth it? Like if you lock, like we said, if you lock at 7% and next week the rates.
Oh, I know what it was. Sorry to interrupt. Free refi. What it's going to do.
Oh, yeah.
yeah,
No,
yeah.
I was going to talk about
Yeah,
that after we're done with the
yeah.
questions.
and then at the end, please, let's plug this one more time before you end.
Yeah, so I'm going to get these next few questions quick. Because every question could get us on a tangent
I
on
know.
something.
I wanted to talk about that because we can't necessarily go into that much detail on interest stuff, but like I didn't understand that until 6 months ago.
Yeah.
About rates.
Yeah, but
The rate advertised and the rate you get the par rate and the rate advertised are usually.
are you
with
talking?
the point.
You're confused. You're talking about the APR rate and then your interest
Are
rate.
you
No.
talking about that? Or
I'm
are you
talking
talking
about-
He does, Sheila. It doesn't make sense what he's saying, right?
Well, it kind of
The
does.
way you're wording
The
it.
way lenders advertise rates is always with the point.
No, it's not.
Well, it's always with points. There's always a caveat.
It's a point. It's one
It's not
point.
1 point. It could be 5 points.
But I'm telling you, the rate that's normally advertised is with 1 point.
Okay, let me share something. The rate that's advertised, it has to by law. So if I say a rate that you can get this rate, I have to give you an APR. The APR will have in it the costs. It will have the point. It will have the processing underwriting fee in it. So if it's a 7.375, it might be 7.875 APR because of those fees that are added in it. That's not your rate. That's a one-time rate with the fees. That's how they have to express it to the public.
Your APR is always higher.
Yeah, it's
Right,
always higher,
because
but
you
it's
pay
not your rate.
Is your APR higher if you pay no points?
No, then
It's the
if it's
same.
7.375, 7.375, then you pay nothing else.
And then the rates you hear from company to company, every company buys different blocks of money at a different rate. Neo could get $50 million for that month for their whole company and buy it at 5%, whatever the number is. Where another company might buy a block of $30 million and they may pay 4.75. And then that person that in charge of buying that block of money throws out rates to all their branch offices and sees what they can make for the day based on putting it
And
out
it's
there.
only good for a period of time.
Yeah.
No one's going to offer it forever.
And the reason you can't break a lock when you lock it in is because you're kind of like predetermining
Yes.
what the money is that you're doing already. They're already making moves based on you locking.
I'm promising to deliver to you
Right.
at this,
At this money.
for you. That's what it is.
Okay. Still.
I tell you, mortgages, being a mortgage lender and being a professional at mortgage lending, not just being a loan officer. In other words, knowing the job to teach it is like being a real estate agent, not just your retail real estate agent, but being a real estate agent / broker that you know the job to go in front of hundreds of people and teach it. Mm-hmm. That's, to me, that would be the real estate broker, agent, company I would want to help me. Like we were talking about the mortgage lender. I don't want just a mortgage lender to help me with my process. No, I want the mortgage lender that understands it, can dissect it, and knows it enough to teach it. Mm-hmm. Right? Yeah. Because you're going to be the most creative. Yeah. You're going to get me the better deal. You're going to get me like that. So we were talking about really quick before I go to question 3. Sheila, when you purchase a home with our mortgage company, Neo Home Loans, if the rates go down after, is it 6 months?
Yeah, typically after 6 months to 6 mortgage payments, it may make sense to refinance. We will refinance you with no processing fee, no underwriting fee, and no appraisal fee.
No mortgage cost.
No mortgage cost. No lender costs. Now you have the option of buying down the rate again if you want, but I'm going to advise you, when it makes sense to go ahead and refinance, and it's typically a point or more.
Right, and you're going to notify them.
I'm going to notify
because
you.
they're in your system.
Yep. We're going to set a strike rate up front. And what I mean by strike rate, if we lock you in at 7.375, and if we talk about, 6.375 will save you this amount of money, are you good with it? They'll say yes, and then I make a note, and do I have your permission? There's a little form I have them sign. Do I have your permission to go ahead and get this going for you? And you say yes ahead of time, so that way we can capture it. Because usually when the market moves, it moves quickly.
Okay, I got 3 more questions. Let's keep our answers down to 60 seconds because we got a lot more stuff to do. We got the real estate numbers to come up. We got our houses of the week to come up, but these spark good stuff though.
Good stuff.
Good conversation.
What do the initials PMI stand for? And can I tell people it's Please Mortgage Instantly?
Oh, it is. Absolutely. Pleasure Mortgage Instant.
Is it?
Private mortgage insurance. That's what PMI is.
And what's it required? How do you get rid of it? What is it?
If you have a conventional loan, you can get rid of it once you have 20% or more equity in your home. And the way you find out is it's usually a couple of years after you buy your house. You contact the servicer, or you contact me, you pay for an appraisal, and voila, you get rid of it. But you can't get rid of it for FHA. We got to refinance you out of it.
You
Perfect.
got to refi to conventional.
Question number 4.
Correct.
What is the one thing more terrifying than a declined mortgage application? A borrower who changes jobs or buys a car during escrow?
Buys a car during escrow.
Oh, it's the worst, right?
That's the worst, man.
Nothing strikes fear in a lender's heart like, I financed the boat last weekend. Are we still okay to close? And we've all seen it and had it done.
Yep.
It's tough. Okay, number 5, it's a true or false. Then we're done with the questions. I can buy a mansion with $5 down and a good story. True or false? I can buy a mansion with $5 down and a good story.
False unless you're VA.
False, unless the story comes with a VA loan, USDA loan, or some very generous relative, which we don't have any of those.
Well, it depends what you call a mansion.
In reality, even a low down
subjective.
payment programs have strict guidelines, bonus points. If she laughs before answering, let me know. If you want to turn this into a mini game show, this is Chat. Chat's helping me out.
All right,
She
well,
did
I want to go back on one of
go.
those questions real quick because I can share some personal experience, and I'm sure some other people out there can relate. My payment on my $390,000 loan is $36.50 a month.
Well, why aren't we refinancing you?
Well, because I still don't think it makes sense because I'm a 7.625, and I don't think I can get under a 6.625 right now.
Not conventional.
Exactly.
Yeah,
So that's why I'm
not
not. And
conventional.
then
Yeah.
2, what do you think my mortgage insurance is? I found
probably like 400.
a little higher. $490. I called to see if it was worth getting out of PMI yet because I'm very close to 20% equity with the forced remodel, with 5%
Was
down
screwing
initially.
your dad on the purchase price.
Yeah, I think it is.
Not really.
Hey, I just want to say, do you
Not
know why
really.
he got it house so cheap?
Dude,
I sell the house
didn't
to
get
him
it
for
that cheap.
$450.
I did not get the
He
house
goes
that
and meets the
cheap.
appraiser
no, you just
out there.
Put a number on the
And he
house.
says, hey, he goes, you know what? Don't worry about hitting the appraised value. It's my dad's house.
No,
Just be
I
real
said,
conservative.
I said, let's be real on the appraised value. Let's not hit this BS number that he just put on the sales price because I know this is wrong.
Because I told him I'd
I
sell it
ran
to
the
him for whatever it
comps.
appraises for.
I ran the comps. I'm like, this is way too high. It's still so even with my $65,000 into the home, it's only worth like $475.
How much you owe?
I owe $388.
Oh, you got 20%.
No, I need to be at $492 for 20%.
You're at 475.
I'm around there. Yeah.
Unless you put some money down.
Well, yeah, I don't have an extra $20,000 to throw down on the principal right now.
Dad.
Auntie will give it to you.
Oh yeah.
Auntie
Well,
will help
I'd
you
love
out.
to get that taken care of because that's $500 less
She'll
on my
give me the
payment.
friends and family rate.
That is $490.30 less on my payment. That's how much mortgage insurance.
Wait
I'm
till
paying.
you refi.
That's ridiculous.
Once you get like a 6.5% interest rate
And
and
get
get
rid
rid
of
of that,
mortgage-
you're going to be like save $1,000 a
I'm
month.
going to be at
Yeah.
$2,700 a month, $2,800 a month.
That's
and then
crazy.
it'll be reasonable.
Right.
Reasonable. I
Then if
still
something
could've-
happens to the real estate market, you could drive Uber and still make the payment.
Most likely, yes.
Right?
At least, hopefully, because that $36.50 is hurtful, very hurtful. Especially when I found out $490 of it was just mortgage insurance. I was like, ah.
All right, Sheila,
Yes. Hi.
tell our viewers on camera, why do they want to use Sheila Merrill? I'm not talking about the company, because you know when people use the real estate guy, they don't care about EXP. They don't care about. They want to know the individual, the character, your reviews. What do you got going on? Why do people want to use you to do their mortgage in real estate? Tell them.
Okay.
Into the mic.
Let's go.
Oh, the mic. I
Yeah.
keep looking at the camera.
Well,
thinking that's
camera
the mic.
and mic.
All right, people.
Besides you're the real estate guy's sister, that's really a good reason. After that.
Okay. Besides being the real estate guy's sister, I actually made him. You know that. No. So you'd want to use me because I care about all my clients. I do not. You go to some places. Let me just tell you what any other lender will do first, and then you'll understand what I'm talking about. You go in and get a pre-qual. You go into a bank. Not all banks. Some banks. You go into other lenders. a lot of them don't even own a property. A lot of them don't even have life experience. A lot of them don't have you can see you're just a number with them. With me and my team, we take the time to get to know you. I want to know what your goals are. I want to know about your dreams and goals, what you want for the future. I help you create your generational wealth through real estate. I listen to you. We pull together a plan, provide it for you, and we guide you every step of the way. So it's genuine interest in you, caring about you, not only the perks that you get when you use us. You get gifts along the way. You get cookies, you get a cutting board. You get a party, you get all this cool stuff. You become part of the family. But it's having somebody that really has your interest at heart, not another lender that you're just a number.
I'll tell you what you do really
next.
well. You do this very well. Doesn't work for me, but you do this very well.
Okay.
If you're an analytical person, if you're like, I want to cross my T's and dot my I's. I want to know every number. I want to know this. Teach me the business. You call Sheila Merrill. She's going to sit there with you, and she's going to talk to you about every single aspect of that loan. You do, don't you?
I do.
You help
I
them
do.
along the way.
Uh-huh.
People like me, what do we want, Sheila?
You just want to know the bottom line. I can do that too.
Yeah, do
but
5 minutes. Give me 5 minutes. Tell me the bottom line. What are my
Yeah.
fees? Great. My rate, my payment. Am I approved? Yes. Okay. See ya. That's guys like me. So you can do both, but you're really
I can
good.
do both.
You are really good with the analytical people, for sure,
Yes.
without a doubt.
Yes.
All right, Jacob,
All right, we got a few minutes. Let me go over some houses of the week real
let's
quick.
do it. Let's go.
All right. So I got a coming soon listing. I've been working with this client, and just so you guys know, we do international clients. We do people from all over. If you own a home in Las Vegas, Henderson, Paradise, Pahrump, Mesquite, Mawapa, we can help you out. Doesn't matter where you're located. As long as you can DocuSign, use the internet a little bit, we'll help you out.
We're gonna
all right?
help you.
Helping an international client sell our investment property out here. We're going to be going live here probably in the next week or two. This is 7400 West Flamingo Road, Unit 1082. It is 959 square feet.
Don't tell me the price. I'll tell you. It's a condo,
Condo?
900, 2-bedroom, 2-bath.
Yes.
I'm gonna say it's 280.
Really close. The last one sold at 275, so we're going to go 270 because the market's turning, and my client understands that she doesn't want to sit on the market for 90 plus days. So she's
That's
actually
good.
trusting me.
It looks good.
She's trusting me to actually go in a little bit lower so that we don't get stuck with all the competition, because everybody in that community, 65 days, 94 days,
Right.
115 days, 120 days, and we don't want to sit on the market that long.
No.
She does not want to deal with those costs for that long, and I said, well, we need to price it correctly then, not shoot for the stars.
Perfect.
The last one was under contract or was listed at 285. They dropped to 275, finally sold at 275.
Got another one?
It's very cute. Yes, there was a tenant in there that destroyed the property before, so they remodeled most of the place. It looks
Awesome.
very cute now.
Awesome.
Another one, 5133 Burr Oak Drive. This is
Oh, that's the Los Prados.
25 square feet. This one was listed on the market yesterday.
550.
It is listed for $550. You know, because it's your listing, I assume, right?
Yeah.
It's 55 and over community, correct?
No,
Or no.
it's not. There's a golf course. It's older. It's probably about 40 years old, the community.
Okay.
But really nice. Small little golf course, clubhouse, guard gated.
4-bedroom, 3-bath, built in 1996. All right, 2,500 square feet. All right, that's a lot.
Yeah.
It's a nice sized property.
Yeah, good property. Should go quick.
Another one, 2807 Hermosa Street. This one is 875 square feet, 2-bedroom, 2-bath, off Maryland and DI. So it was on the market. This one has been on the market for 4 days. Again, 875 square feet, built in 1960. 2807 Hermosa Street. So if you're interested in any of those
Nice.
properties, give us a call. Our number is 702-310-6683. That's 702-310-MOVE.
702
Call the real
310
estate guys.
6683. We're going to take a break. When we come back, we're going to go over some real estate numbers. And also, Sheila, I want to talk about this is really challenging right now in our industry. And it's the trend. And I get it every single day. Someone's house is listed with another agent, and they call us to either buy it or they want to get rid of their agent and they want to hire us.
Wow.
And it's very frustrating. And I'll tell you exactly what we say when we come back in a minute.
Cool. I also want to plug that we can do loans in 50 states. We need to say that. It's
Isn't-
like in all states.
Right. Isn't there 55 and over portion of Los Prados?
Yeah, there is.
Oh, it's just not in it?
It's not in it, yeah.
Okay.
There is a
What area is 55 and over?
I don't know which area, but it's two areas, families
sides?
and 55 and over.
There's
Got
two
it.
guard gates in there, right? Is it two
Yes,
guards?
one off of Ann Road and one off
Because
of
the
Jones.
only reason I know that is because I was showing my buyer houses and she kept wanting to look in there and I kept seeing that there's 55 and over, 55 and over, 55 and over. I'm
Yeah.
like,
What you know it, you know it.
Yeah, well, just remember, only one person needs to be 55 and over.
right, right. But my buyers are like,
So Sheila, tell the camera,
Yeah.
tell our podcast viewers,
Hi, podcast viewers.
people that want to have a loan, that love what you have to say, that trust you by seeing you and watch you, you can do a loan in all 50 states.
all 50 states.
And how do they get a hold of you?
So you get a hold of me at 702-505-0908. 702-5050-908. 5050-908. And you can also go on my website, SheilaMerrillLending.com. You can check it out. You can check out the Neo experience. I didn't talk about a lot of stuff you get. There's tons of apps that you get to manage your daily life, your property, see what your neighbor's house is worth, etc.
Keone, where's the little speakers that you usually give us to put on here?
We have the audio that's in a drive. It's automatically in a drive.
Okay, so you don't have to have it.
No. Do you want the speakers?
No,
No.
I don't care. How you feeling, Keone?
Oh, good.
You're looking good.
Thank
She's
you.
a cutie, isn't she
You
a
are,
cutie?
yeah.
Thank you.
I love her. I just want to smack her. She's so cute.
I'm in my PJs.
Her little
right
curly
now.
hair,
Yeah.
and PJs,
She's
and
cute.
yeah.
It's been a while
Yummy.
since I've been back.
I saw that. So the townhomes in Los Prados, they're ridiculous. I couldn't imagine owning one of those. $550 for the HOA.
Oh, yeah.
My buyer wanted to look at one really bad. She loved it. It was beautiful. Priced. It looked like it was priced beautiful. It was at like $350 with the Linda Crampton's listing. I'm like, oh, I know the agent. Let's go look at it. And I was like, wait, never mind. I looked at the HOA.
Well, we had a condo that we had. It was priced. It was cute. The HOA's for something. It just didn't sell.
It's not possible because you have to be priced so low because the people need to be qualified 30, 40, 50,000 above the list price.
Yeah.
To qualify for it. It's just fucked up.
It eats into the amount of house they can qualify for.
Right.
It's like,
Right.
better off with a smaller house.
Yeah, this client's mom is a real estate agent in Virginia. The only reason I say that is because they're using their lender, whoever it is. I didn't have it. I got them when they're already pre-approved, ready to go on the hotline. But yeah, they wanted that townhome and they only qualified up to $385, and the condo was only at like $350, but 500 HOA.
All right, last segment. Boy, an hour goes fast. I remember
Does.
me
Yeah,
and
it
Dustin
does.
used to do it for 3 hours. We
Did
thought,
it for
whoa,
three?
3 hours. Then it went down to 2. And we would have, like, let's say after this segment, we'd have a hard break. And then we'd go
Right.
to another hour. And that was actually pretty good. 2 hours, which is an hour?
The hard break was like 15 minutes or something.
No, it's like 10 minutes.
Oh, 10 minutes. Okay.
Yeah. All right. Market time. JT.
Give me a few minutes. Let's keep going on some rates when I had to pull them back up. I
know what to do. I can talk about the market. So, Sheila.
Well, I'll tell you what
Yes.
the median
Do
price is and what the
do
inventory
you see
is.
an influx of buyers right now, or how do you view the real estate market right now?
I do. It's like I've heard some of my peers saying that they're not busy and so on. They're not making money, and it's like if you care. I'll just be honest. The way I am, this is me. If you care about your clients, you can educate them, and when they're ready, and help them feel comfortable. Because a lot of being afraid of the market is because you don't know. You're not informed with what's really going on.
Right.
And that's part of what I do. I inform you and let you know, put your fears at rest, and show you the stats, the proof. It's not just talk, it's proof. Since 1942, real estate has still been one of the most secure investment vehicles you could have, because you always need a place to live. And remember, you only realize a gain or a loss when you sell the property.
Right.
That's it.
Anybody
Yeah.
that bought at the top of 2006, 2007,
If they
whatever it
would've held
was,
it-
they're
houses
still
are
good.
double today.
They're still good if you held on.
If you held on.
I think the
Yeah.
key with any investment, whether it's the stock market, real estate, you don't lose until you sell.
Or gain.
Right, or gain. You got to be forced in that position. So when people go, man, I lost my ass in 2008, 2009, 2010, Well, it was either a really bad loan or you were forced to sell, but you didn't have to.
Yeah.
A lot of people had payments that were just fine. They just thought they were 200,000 underwater and they wanted to get out of it. Well, maybe there's something for that, but you could just stay and ride it out
Right.
and make your comfortable payment and watch the market come in.
Yeah, if the loans were fixed and they sold, it was just out of fear.
Right.
Right. If
Right.
you actually had a fixed rate back then, I'm sure today you'd be very happy with whatever that rate was. And,
Oh, yeah.
and whatever that payment was.
And that's part of our slowdown. It's not just interest rates are coming down. It's people have that 2 and 3 and 4% interest rates now on their current house, and they don't want to move and buy another house and move up and have a 7% interest rate,
Right, and double the payment.
double the payment. So they're either remodeling the home, they're making do with it, and they're just everybody. There's a lot of that buyer base is just kind of in limbo. They're waiting.
Right.
The people that are buying and selling right now are the ones that have to.
Yeah.
Because their family's grown that much, or they're moving out of town, or they don't own a home, and it just makes sense to buy a house because it always makes sense to buy a home versus pay rent.
You know what I've done for some people too is say you have that 3 or 4% interest rate, but you've got $2,500 worth of credit card payments, auto payments, and then the mean interest, the average interest between all that other debt is probably literally 15%. Well, what we can do is we can refinance all of that, put it together, and save you $1,000 or more a month, and get you a rate, in the high 6s, low 7% range. So in some people's cases, it really makes sense to refinance if they have all that other debt.
But
at
what's
higher
wrong with
interest
this? I know
rates.
this is a totally strange way of looking at it, right? But to me, when you buy or sell a property, your gain or loss is not just what you make on the property, but the interest rate in your payments, if you go that route, unless you're paying cash, has a lot to do with that gain and loss, right? Over the course of time. So let's say you purchased a home and it was $500,000, and you want to go to a $1 million house because it's just too small, or you don't like the neighborhood, or you just have to move for whatever. Maybe it's a 2-story, you want to go to a single story, right? And you have a 4% interest rate. But right now you can get about a 7. Well, if you bought the house and you made $200,000 in purchasing your home in equity, you made $200,000, right? If you made only 150 or 160 or 170, would you still move? Yeah, they would still move. It's where the market went, right?
Right.
Why wouldn't you take $30,000 and buy the damn rate down?
Yeah, you
what's
can do that.
What's the problem?
Absolutely.
Like, what's the difference?
You can do that.
I mean, right? I mean, think about it.
I can show you. There's temporary rate buy downs, 3-2-1s, 2-1s. That just means buying it down 3% the first year, 2% the second year, 1% the third year, and then it goes back to the regular rate. But the thing is you're never going to go back to the regular rate because
You're gonna
we're going to refinance
eventually.
anyway.
Yeah, I mean, it's all part of the same.
I feel
But
like
you
the
can't-
best case scenario right now is a 2-1 buy down. We
Yeah.
expect the rates to be more than a point lower within the next year or two.
And if you have any money left over on that buy down, we apply it towards your principal. You
Or
don't
we take
lose it.
tips. They can tip us too. Give us more commission. We're good. That happens sometimes. So the real estate market, I've noticed the last 2 or 3 months, our median sales price, which we monitor, has dropped a tad.
It's
right.
it's under
we peaked at 485, 490, something like that. Now it's-
485, and it's a little bit under 480 right now.
Yeah.
And I expect, let's see, when we get May's stats here in about 2 weeks, we'll probably see 478.5.
But
or
nothing drastic,
475.
though.
No, nothing
I mean-
crazy, but we need a correction.
And we
We've
do
already-
see our inventory rising
Yes, we'll pass 10,000 homes on the market next week.
with condos, townhomes,
Everything.
So that means single family homes, we have about 7,000.
It'll be pushing that number, yeah.
Holy
It'll be pushing up there.
smokes.
Not quite that high yet. We're in like 6,600, but it'll be pushing that number soon.
Man, I remember just a year ago, we were half of that.
Not half, but yeah, we're close. Yeah, we're up about 80% year over year on inventory right now.
Aren't you seeing some houses? This is what I'm seeing with the appraisals. I have a couple of clients that have gotten like 25,000 in appreciation. If the house is priced right to begin with in decent condition, I'm seeing built-in equity on some of the properties.
There's niche communities, there's niche areas right now that are still doing very, very well.
Yeah, but
and then there's
But here's why you're seeing built-in equity. I don't mean to cut you off, but
yeah,
I
know you're gonna say it.
But
Go.
appraisers are always behind the 8 ball.
That's
When
true.
the market's
They're
going
in
up,
arrears. Mhm.
they're appraising them low because they have no comps. When the market's going down, they're appraising them high.
Right.
So when you see someone buying a house and they're like, oh, I got this deal on a house, and they're appraising it at 20 or 30,000 higher, is because they're looking at the sales. But when the market starts to dip, you don't get what that house is appraised for. You don't get what the last one sold for.
Right.
When the inventory increases, you better be the lowest price, or you better have something that stands out in that house to get it sold.
Right.
And that's the problem we're having right now with homes sitting on the market, and why we get a call every single day from a client that says, my realtor's not doing their job. My house isn't selling. Well, first of all, days on market's pushing 90 days.
Right.
That's 3 months. Cool your jets. Hold on. Right? Be
Just
patient.
wait, yeah.
Second thing is make sure you price it right.
Right. If you don't listen to your agent, why'd you hire him?
Yeah.
Why are you hiring them?
No,
If they're
but
telling,
it's the agent's fault
right,
for
but
taking the job.
exactly. But my point is why are you hiring an agent if you're telling them what to do? Do you think you know their job better than them? If you do, then do it yourself.
Someone
or call
called me
someone
yesterday.
that you trust.
Someone called me yesterday because my house has been listed for 17 days. I'm like, okay, that's not very long. She goes, I started at 6:30. I said, okay. I didn't even pull it up and look at it. I'm just having a conversation with her.
Okay.
One thing we don't do is we're not stealing people's clients.
Right.
We don't do that. I'll help an agent versus try to take their clients.
Right.
So I said, she goes, but I just lowered it. I go, what did you lower it to? She goes, 585. I go, why did he list it at 6:30? She goes, because I told him so. And I go, that's your agent's problem right there. And I asked her, who made the price, you or him? She goes, I did. That's your problem right there.
Right.
Yeah.
Don't listen to your seller. If your seller says, I know what my house is worth and this is what I want to list it for, man, go with your gut. Look at the comps. Look at what it's worth. Know the competition and walk away. Because we walk away from half right now.
I mean, yeah, if not more. Unfortunately, you've got to be realistic in this market. And because we spend not only time, but we spend money listing homes. We can't afford to put money into a home for it to not sell and then it be our fault.
Jacob, we're out of time. Sheila, great having you with us.
It was a
Sheila
pleasure
Merrill
being
from
here.
Neil Home
Neil
Loans.
Home
What's your
Loans,
number?
702-5050-908. 5050-908.
Or just call the real estate guy.
702-310-6683. That's 702-310-MOVE.
And we'll get you over to Sheila Merrill if you're looking to buy a house or sell a house. Use the professionals. Over 8,000 homes sold, $2 billion in sales. And don't forget about our buyers seminar. Sheila, you got 10 seconds.
Investor's Edge, this Thursday at 8400 West Sahara, 6 to 7 p.m. Call us. I'll give you all the details.
And next week, if you guys are really interested, we have Donald Trump on our show. You got to listen to it. It's going to be great. It's
Call
going to
for
be great, I
details.
tell you. It's going to be great. It's beautiful. Everything's beautiful. Have a great week.
Call for details. Yeah.
The call for details, that's a lie.
Oh, call for details.
Does that save you? Call for details.
You can say anything if you say
Yes.
call for
Call for
details.
details. Oh my God.